The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. Anyway, we are going to take a quick look here at the German DAX and also the FTSE like we usually do. And today we put the order, I put the order in. Hello, Federal. Let's get this correct. We put the order in for the British pound, or the chart in for the British pound. You can see that it's making a retracement 3 drive to a top pattern on that 4-hour chart. And that means that there should be some resistance up there at that 132 level in the British pound. Of course, going through that, that means it's going to go a lot higher. And speaking of going through that, we've gone through some big numbers last night in the stock indices, as we pointed out in the newsletter and also in the video that we sent out on Sunday. We had a strong probability of going higher in these, mainly because the market was in such a state that it was ready to explode because we'd gone through all of these numbers like they didn't even exist. Specifically, I'm showing you the NASDAQ here right now. When we went above 11,600, we are very, very close now to 12,000. We're at 19,000 and change. That's a 78% level. And we've hit the 78% level in the S&P here tonight this morning at 34.99. The actual number is 3503. And this has been just basically an upward move ever since it opened slightly lower on Sunday. And from then, once we got unchanged, it just kept going and going and going, and it keeps going. So remember, the number to watch today is 3503. My assumption is we're going to hit 3503 and then probably trade below it. That would be the trade to do. Let it hit the 3503, and then once it gets back below that 34.99, that would be a very, very low risk to see that thing unfold. Folks, I got a little human interest story here for you this morning. Might get a little teary for myself, but as you know, growing up, you have friends that stick with you for your whole life, and one of those friends was Bob Thompson. We lived on the south side of Terre Haute on the same street. He was 2 doors over, and he and his brother and sister and mother lived there. His father was killed in World War II, and his mother basically did laundry for the neighborhood, and they used to come over and have food with us and everything. And we were altar boys together. We went 12 years of Jesuit school together. We rode to school on our bikes, came back to school on our bikes. I mean, that's how close we were. And then when we were in college, we went back and forth together, and we were on the basketball team, all this time. And then when Bob we went to college, Bob went to school. His education was his subject. And I was in science and stuff. So we were still friends all through that time. We graduated, went on with our lives. And then luckily, back in during the soybean oil thing, Bob was involved with that and did really well. And then from then on, we went to Drexel, and he was on really well. Just like John Raffoni was with me during the soybean oil and also the gold. I lost John last Thursday, and then Bob passed away here Saturday morning. He had been in a lockdown unit for Alzheimer's for 16 years, folks, if you can believe that. It's $7,000 a month. Fortunately, the university paid that through the insurance, but it was pretty tough. But I have a great human interest story to tell you here. It might get a little cheery for me, but I think I can make it through. One of the things that Bob did when he was at Indiana State was in 1976, I was at Drexel, of course. I just started. We started buying gold, and we saw a really good thing there. We kept going all the way through the time that I left Drexel in '82, and Bob and I still kept really close contact. But in 1976, he called me up and we were chatting, and he said he was trying to get this kid to play basketball for Indiana State that quit at IU, and he said he was number 3 basketball player, you know, in Indiana, which was a big deal. And he said, this guy's better than Larry Bird, and better than Oscar Robertson. And I said, baloney. Well, the kid was Larry Bird. And by golly, it turned out to be a pretty good thing. And so I got to know him. And when they had Larry Bird's birthday party, he was born on December 7th. Of course, he's playing basketball in the NBA then. So his birthday party was always on July the 7th in Terre Haute out at Max Gibson's farm. They have a big fishing pond there. So you had to catch your own fish. And there would be probably about 100, 150 people there. And I was fortunate enough to go see 2 of those games. But the imminent story is this. In 1978, when Indiana State was number 1 in the country, they were undefeated, and everybody was talking about this kid, Hick from French Lick, which was Larry Bird. And he said, they were playing against the Bradley Braves on national TV. Indiana State had never been on national TV. And Bob now was director of admissions, and he was helpful to get Bird there. And so they were playing on national TV, and Bird was averaging about 33 a game. And Bob told me he's going to get 50 points. And I said, that's pretty good, 50 points. I said, against Bradley. I said, Bradley was ranked number 9 or something in Terre Haute, and Indiana State was number 1. And he said, well, let's bet $50 that he makes 50 points. And I said, okay. I said, I'll bet $50. And so Saturday, when the game started, he and his buddies were at Bob's house, in his old cave room, and they were watching the game. And the game started, and at halftime, Larry Bird had 6 points, and he looked absolutely terrible. I mean, I was laughing and laughing and laughing. I called up and I said, you guys are absolutely nuts to think this guy is anything like, Oscar Robertson. And I said, this $50 is in my pocket. I said, just take it, and buy some lunch for your buddies. I don't want the money. We want to double the bet. I said, oh, Bob, I said, shut up. I said, I'm not going to take your money. So I chatted. I said, no doubling the bet. Anyway, the second half starts, and Larry Bird comes out, and he makes 7 3-pointers in a row. He ended up with 56 points on the game, I believe. He scored 50 points in the second half. So I became a Larry Bird fan at that point, and was able to see him and meet him and everything. So it was really good. But Bob was really great. Terry's asking any Bobby Knight stories. I certainly do have a Bobby Knight story. Bobby Knight's first assistant at Indiana University was Ron Felling, and Ron Felling was in my wedding. Ron was from Riley, Indiana. He went to school at Indiana State, and we had been buddies ever since we were kids, just like Bob. I mean, we all played ball together. But I've only met Bob Knight a few times, and I've lost contact with Ron, but he moved to California after we retired from Indiana. But, this is just part of, growing up and all that stuff. So anyway, Bob was, he's living with the Angels now, which is good. And that's really great. Okay, we'll take a break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to mention this is going to be a pretty exciting week here at TFNN. Tomorrow, we have Bill Meridian of Cycles Research out of Vienna, Austria, and Wednesday, we are going to have none other than Joe Fibonacci DiNapoli. I showed Joe Fibonacci numbers with the proportional divider way back in 1962. Hard to believe it's been 48 years ago, but he's still going strong, and he's going to be our guest on Wednesday to show some of the things that he's doing, which will be fun. I've posted a chart into the room here. You'll be able to see it. It's basically, you'll see a bunch of blue lines up there. That's showing you how much of the information that you get in the stock exchange is actually hidden from you. It's done off exchange. They're called dark pools. Now, I don't know a lot about them, but I know enough to say that they are very important, because what they do is they match traders. In other words, these hedge funds, they say they have 1 million shares of Disney to sell. They'll shop around other hedge funds that are looking to buy it. You don't see it cross the tape until about 2 days later. They have to report it, but it's not reported as a transaction until later. Now, I've posted the link to that. This was brought to us by Jeff Huge out of Alpha Insights. Gives you a good idea of how some of this works. Now, if you're trading shorter term stock stuff, this is not going to mean too much for you. But if you're looking at longer term, it might have a meaning. So you might check into it. I don't do stocks at all. I watch stocks, but I'm trading. If I'm going to, and I don't trade Apple, but if I were to trade Apple, I'd be watching it on an hourly chart, and that's what I do, folks. I'm a risk control specialist, if anything else. The license plate on my car says no risk, so that's what I really try to do. But that's what dark pools are. They've been around for a very long time. I talked to another friend of mine, Rich Anderson, and they were doing the same thing at Drexel Burnham, because they would have these Monday morning meetings, and these guys would have stuff to sell. And, some of the accounts that Drexel had in the office that I was in they were big accounts. There was Bob Hope, Roy Disney, Gene Roddenberry, just to name, Chuck Connors, just to name a few. I mean, these guys had, huge portfolios, and they would shop them around, to get a better price. So that's it. Okay. Anyway, let's take a look at the. Here's another one. We want to talk about the short interest. Let me get this up here right now so we can spend just a little bit of time about short interest. I've showed you a million times how to do that. If you want to know the short interest, you just go to www.cme.com and click on volume and open interest. And here is showing, what the gold futures open interest is and also the gold options. Look on Friday with the big up move in gold. You see the increase of 11,000 contracts. That's bullish, folks. And that's what you're looking at. You got more buyers coming in, and they were willing to bid up for it, and that's why you want to be able to do it. Now, what I look for, let's do the next one up here because this is important. We want to watch silver because silver, if you take a look at it, it only had it was only had an open interest increase of 2,300. Gold had an open interest of 11,000. Well, that's about right because the volatility in the gold is about 6 times not volatility, but the open interest is about 6 times the open interest it is in silver. So that's why you look at it. The way I follow open interest is if the market is going and making new highs all the time. Okay, that's very, very bullish if the open interest is following along. Look at here at the E-mini futures here, folks. Let's get this up here. And Duffy, that's not nice. Duffy just posted something in the room about my license plates on my car, saying no risk, and he said the license plates on the hearse carrying me out will be next, and that's probably right. I'll have to remember that one. That's a good one. That's really good. I have to tell you something else that was funny. I called the funeral home, Callahan Funeral Home, on Saturday to see what the services were going to be for Bob. And I haven't been to a funeral home in Terre Haute since my father died. That was 1970, and. But anyway, I called Callahan's, and they buried everybody in our families, both sides. And so I told him, I said, look, I'm a friend of, Bob Thompson. I said, I'd like to talk to his wife, Marty. And I told him what the guy's name was. He started laughing. And I said, why are you laughing? He said, he used to date my sister. And it was one of the Callahan's younger boys. He's a great-grandson of the starter of that thing. And he remembered who I was. Oh, dear, that means something. Okay, let's get back to these markets. Enough human interest stuff. We'll get this up here, take a look at it. Okay, that's one advantage of being older, folks, is you get to see friends for a very, very long time. Let's move this up here. Take a look here at Dr. Copper. Mr. Bo is kicking some serious hold on here to get this up here. There we go. There we go. You can see here that number that we were looking at in the copper, that 308. It's been there now for several days. 2 days now it's been trading up there. That tells you got a lot of resistance at that 308 to 310 level in the copper, folks. So if you had anything, I would be looking at more to the downside. So let's keep that in mind as we look at some of these charts that we're watching here today. Okay, the next one we want to watch very closely here is Mr. Bitcoin. We get this one from our friend Gary Szymanski here in Tucson. We'll get this up here. You'll see here that we are really ready to break out of this triangle. It has a really high probability of breaking out to the upside. And the reason why is if you look at the bottom lines on that triangle, those are all perfect fib pullbacks. The first one is 61, the second one is 78, and now we've taken out the highs. All we need now is to see a trade around 11,200, and we should see Bitcoin going. The other thing, folks, is if you look at this really closely and look at the low that we made back here on March the 20th, we haven't even made a 382 retracement yet. We couldn't even come close to a 382 retracement, and that is a powerful thing. And remember now, we're 4 weeks into this correction, and this market just does not want to correct. So that's one that you want to pay very, very close attention to, in my opinion. Now, remember, folks, this morning, as we're watching the tape, we want to keep an eye on the price of 3,500 on the S&P. Have we hit there yet? Yeah, we did. No, we did. Did we hit it? Yeah, we did hit 3,500. But the key level is 3,503. That's the number that you want to be watching very, very closely. I think it's very, very important. Another one today to watch that we talked about in the video on Sunday that we sent out was to watch the Treasury bonds, folks, because the Treasury bonds are literally fighting for their life, and I mean that in the most fondest sense of the word. Let's get this up here, and you'll be able to see it. Here's where we are. We're trading right now. We're at about 75.12. We've been here for 4 days at that 73.08 level, and so we're a point higher, and it really should rally. We're rallying a little bit today, which is good. But folks, if we go below 173 after testing that support for 4 days, that is not going to be a good sign. And that's where you want to use market feedback, because the Federal Reserve has been feeding us right out of their little baby jars, a little pablum and tapioca like they usually do, and telling us the rates are going lower, but the market might tell us the rates are going higher. We'll be right back. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and several people have asked if I have any other stories about Larry Bird and stuff. But I'm not going to do it here on the show here because we need to get some things done. It's very important. Some of these markets that we're looking at today, especially in the stock indices at that 3503 level, very, very important. And also the bonds, making sure that they hold that 173.08 level. Gold has a negative pattern going on right now. We should have some support around 1917 in the gold, but that overall longer term we might be looking at something that could be really exciting. Folks, there's one other market here that has gone absolutely nuts here today. Let's get it up here to take a look at. I don't know what has caused it. Let me do the hourly chart so you'll be able to see it, and that is the natural gas. I don't know what occurred. I guess the natural gas trees must have had some problems because it gapped up quite a bit, about 17 points, and has held the gap, for the first, 8 or 9 hours of the day. So that's a very bullish sign. I do not know what's happening with the fundamentals in this, but has to be a fundamental change in something because this is a huge move in natural gas. Anybody that knows in the room, if they'll let me know what happened here, we'll see whether that's going on again. Duffy's saying it's the hurricane, but I don't think it's the hurricane because we've had several of those and nothing really happened with it. So that's my guess. But something happened in natural gas. So that was the first thing I saw on Sunday night was the fact that thing had gapped up and we had sold it. We had some long and the market went up, and on Friday we had a nice retracement, and so we took the profit on it. And by golly, look what happened. The thing just kept going and going. So there's got to be something going on a fundamental basis that is pretty important. Now, the crude oil is down a little bit today. We had a nice run at about 5 or 6% over the last few days. It's correcting that. So it's still in a downtrend in the crude oil, but I believe that it has some support down there at that 38. But going below 38 in the crude oil is not a good sign, and that means you're probably going to go a whole lot lower in just by looking at it. The key ones today to watch, of course, is the S&P at that 3,500 level. My assumption is it's going to go up and take out the stops at 3,500 because it's an even number, and even numbers don't last very long. The 78% level in that thing is exactly 3503, but we went through that. I just posted the one on the shut the front door, Larry, on the NASDAQ. Remember, we had that 61% retracement, 11,775. Sunday night, when it went through there, I mean, it didn't even exist. It went from 1170, it hit 11,780 right away and went another 200 points higher. There's nothing wrong with using these numbers to trade with, folks, but when they go beyond the number by more than just a very small amount, just, $300 or $400, you're wrong. So you can't stand there and try to catch a falling knife or, reach for a star that's going up. You've got to have a place to put your stop in, and that's what these numbers are for. When you go beyond the numbers of 618, it's going to 786. When you go beyond the number of 1.27 expansion, it's going to go to 1.618. We looked at this in copper over the last few days as Bo was trading it. We saw it unfold. Plus others, I'm just saying you got to do the work yourself and, prove to yourself that these things work, and then you'll be far better off. Let's move over to the grains here because this is a strategy that I told the folks over this weekend is to take a look at these. These are the grains. We'll get these up here. These are pretty much current. You'll notice that we had the report that came out there on the 10th. And you'll notice, it wasn't the 10th, it was the 9th that it came out on Friday. We had the big spike up. The middle one you'll see is the soybeans. We got up to 1080 and dropped all the way down to 1054, and we've been hanging in that area for some time here. My suggestion is to look for a retracement, and we did get one up at that 1073. That was a 61% retracement. At that point, you don't have to risk more than about 4 cents because the difference between the 618 and the 786 is about 4 cents, so you're able to trade that. The same thing in the corn. If you look over, first of all, look at the 1.618 expansion. That came in at 1077. The high on the beans was 1078, and the same thing on the corn. It missed the corn high by 1/4 of a cent at the 1.618 expansion. Right here, natural gas right here for you. Mr. Z has just put it in that I guess it's disrupted production with colder weather since natural gas futures soaring. There's a post in the room there at TFNN. You'll be able to see it that Mr. Z picked up. So it's related to weather and production. So evidently that's what it is. So evidently the natural gas trees are doing okay, at least for the time being. But the fact that it gapped up that much is a big deal. And remember here, we've been trading for 8 or 9 hours now and has hardly backed off at all. So that is a very bullish sign. If you had some, backward and, back and filling selling, you could get a place to look at it. But when your market gaps up that much, you got to be extremely careful, folks, because somebody knows something that you don't know. I had no idea that that production was down because of the hurricane, but I thought that hurricane stuff was pretty much over, but evidently it isn't. So I think it's important that you pay attention to that. We had 2 charts that were sent to us by some pretty smart people. Jeff Fuge over at Alpha Insights had sent this one to us. This is the one that shows the open interest, the record short interest in the 30-year Treasury bond futures by speculators and leveraged funds. Well, that's all good to know, folks, but remember, it's held by speculators and leveraged funds. When they're selling, somebody else has to be buying. So you got to be really careful here. This is why we use these patterns, because these patterns, just look at the chart on the bonds. I mean, you don't have to be a rocket science. It's right at the 78.6. It stayed there for 3 days at 173.10, the same low. So there's got to be strong buying at 173.10. You don't have to know what the open interest or anything else is. Just look at the chart. And this is the highest volume of any commodity that we trade are the notes and the bonds. Notes is first, bonds is second. The notes have less volatility, so there's not as much hedging that you see as in a 30-year bond, but it's right there in front of you. It'd be nice to know who the other side is, but you don't really need to know that if you know what your risk is when you put the trade on. And that's the whole secret of what we're trying to do here is to, quantify the risk. It's not what you make, it's what you don't lose, and that's what risk is for. Now, also, you see these charts. Someone sent me this, and they showed me this, but you see these all over the Internet. This is one showing the relationship here between the NASDAQ and lumber. I know the charts look really nice, but the relationship between the NASDAQ and lumber is rather minuscule, and to say the least. So folks, anytime you see these patterns, and I can promise you this, if you'll just prove it to yourself, these patterns repeat over and over again. In Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street, he talked about this for 700 pages. He had the most extensive formulas that you could ever believe in on how these patterns worked and why they repeated. And the summation of the book was they repeat with regularity and they are predictable within limits. And that's what we're trying to do here. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, somebody just asked why I was bearish gold this morning. I don't know bullish or bearish. All I know is an opportunity. So let's take a look here, what we were watching here. This is a 15-minute chart on gold starting Sunday night. Okay, you see the market went from 39 all the way down to 27, $1,200. It rallied back up to the 78% level, came down, made an ABCD pattern at 1924, and then rallied $11. You know, that's one of the part of the harmonic number sequence. It's 1/3 of it, but went right up to the 61% retracement there at 1934. That was a 61% retracement of the overnight high. And if you notice, you have the lower highs there. That's a 135 pattern. And you can't ask for any more than that. Here's what you needed to know. You don't have to worry about open interest. You don't have to worry about anything else. You know the difference between 1933 and 1936 is $300, okay? So you got a contract that's trading for 1925, okay? So that's $192,000. So you can trade a $192,000 contract for $500. And as you can see here, it's already made $800. And the ABC structure on this takes you to 1919, which is really close to that 1917 that I talked about. That's all it was. There's nothing. You don't need calculus. You don't need rocket science or physics or anything like that. It's very, very simple. It's what we're looking at, folks. I probably get more questions about how the stock market can go up, given the fact that, about 50% of our economy is shut down. I have no idea. I mean, it's totally amazing to me that it can do that. But because remember, I'm not a fundamentalist. I'm a technical person, and I'm just watching these things. When the market hit the 61% retracement on Thursday, we took a little shot on that on the S&P that lasted for about all of about 20 minutes. And I'm going to do the same thing today at the 78% level if we get to that 3503. And that's what we're watching. But as far as the fundamentals, I don't know anybody that know that. But, like Marshall says in here, and also Shane Smolian, he's been telling us about the Fed being in there for months and months and months. You have to respect what the guy's been telling us. He said this Fed juice is a real logical thing, and that's what it's got to be because there's no other explanations about it. The question that I have, where's the Fed been on the bonds for the last 8 points to the downside? They kept telling us that interest rates were going to go lower, and interest rates have been higher. But now they're at the major support. boys and girls, if we go below 173 in Treasury bond, this is going to be extremely bearish. And the reason for that, in fact, you have to watch the rally here, because if we don't rally very much over the next few days, this is going to be, really, really nasty, and rates are going to go higher at a time that we're not expecting it. So I don't know what it means, but I'm just basically looking at the charts. So that's my 2 cents worth. I think we're going to get. I think we had a call. Shane might be calling in to TFNN to log on here because he heard us mention his name. I hope he does. If you're around, Mr. Shane, give us a call at TFNN, buddy, 877-927-6648. I'd like to get your feeling on the Fed juice up here as we approach the 78% level in the S&P, and we're through there in the Dow Jones, because the Dow Jones closed at the 78% level on Friday, and then opened, went higher Sunday night along with the NASDAQ. I told you were going to go, quite a bit higher, and we did. We ran another 20 handles, in the S&P, and another 100 points in the Dow, and another 150 points in the NASDAQ. So those are just a few of the ones that we're watching here this morning. Someone's
Hello.
posting some. Yes. Hey, Shane, how are you, buddy?
Hey, Larry. Good morning.
Good morning. What are you seeing today, pal? With the markets soaring to new highs almost?
Well, it's pretty much what we expected. We saw the Fed juice go into this buyback on September 30th, and we talked about how we had a very strong Astro in the first half of October, and this was a very bullish time. And it's pretty much unfolding to plan. It's been a really good month so far, and I think there's more good things to come. I think there is some Astro potential topping here in the next couple of days, but if this Fed juice continues to keep going like it's going, I think we'll probably just continue to keep going higher here into this election. It's typically a pretty bullish time.
Don't we have a Mercury retrograde this week?
We do. Tomorrow at around 9 o'clock in the morning, Mercury will go retrograde in Scorpio, and then it's gonna go backwards all the way into Libra. I think it's right around 25 degrees on the election day. Then it'll go direct on November 3rd.
It goes direct on election day?
Yes. And I'm writing all about this in the Uranian letter, the election. I'm trying to keep the politics separate from the forecasting here. So, but I do have an opinion about it. Yeah. I kind of keep the two separate. So if people want to know about my take on the election, you can check out the Uranian letter. But I think the S&P looks pretty good. I mean, it's a lot easier to make money on the upside on this thing. September had a lot of bouncing around, but this month is pretty much going to plan. And sometimes you get a bumpy month right before you get these really big successful months like we're having now. So I think it's probably going to continue. I mean, one of the best things that could have happened here is that there's the rumor of the stimulus, but it hasn't happened yet. So what that's doing is that's causing this perpetual rumor mill to help out here. And when you have the Fed juice, and then you also have the dollar juice, I track the dollar juice too. The dollar juice is also in a clean buy right now. So when you've got those two indicators pushing higher, your chances of this market advancing are very good. And then the Astro, of course, we have the planetary speed index rising right now. And the general combined transits is a group of transits that I track. Larry, I know you talk about the Bradley a lot. So what I've done is I've taken the Bradley kind of to the next level, and I include many more transits. There's thousands of combinations in there, and that's been rising for the first half of this month too. So really, it's a pretty clean call for the first half of the month. Whereas last month you had all of this conflict, and the Fed was turning the juice down, and the Astro was conflicting, and all this crazy stuff was going on. But now you've got this real clean look to the market. And so, like I said, a lot of times, right after a bumpy time, you get these big runs like this. So it's been really probably one of the best months we've had so far. We're only into October the 12th. So things are looking pretty good.
Hey, listen, I really appreciate you coming in. We'll have you on again soon, especially if we want to talk more about those aspects that you're looking at related to the election. But it's amazing to me that the Mercury is going to be going direct on the election day. So that usually means that the signs will be correct for a right decision. Is that the way it usually works?
Well, It will be direct by the time they start counting the votes. It's going to go direct in the day, but it's going to be in the sign of Libra. So Libra is a sign that likes to weigh and balance and deliberate and go back and forth and back and forth. So it could add to some confusion because they're going to be trying to weigh. Yeah, of course, right? What else could we expect from this, right? 2020, right?
Absolutely.
So,
wow.
Yeah.
So in other words, you're saying we should have an idea who the president is by July 4th.
Hopefully, or if it's July 4th, it's going to be Nancy Pelosi.
Hey, listen, my friend. Hey, take it easy, buddy, and we'll have you on later in the week. How's that? How about maybe
Thanks,
Friday
sir.
we can have you on?
Sure, that sounds great.
Okay, great. We'll be right back, folks. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have one question from one of our listeners, and that is, what happens if the S&P doesn't make that 3503? Well, gee whiz, it happens all the time. So what you have to do is write that down, that it's giving you some type of information that there's strong resistance there. So look for a smaller pattern during that time that you might be able to find a ABCD going into that next high that doesn't go to 3,500. That's the way I would look at it. Now, we just had a dollar break in crude oil based on that same type of a thing. We had a 382 retracement last night that lasted about 80 points, and we've dropped $1.20 here in less than about 15 minutes. So that's telling us that it's pretty wild out there. So make sure you're using stops, folks, because if you don't, you're telling Dr. Market that you know a lot more than they do, and that's not right. You can't do that. I had one other story about Larry Bird in 1979 when they were playing against Michigan State for the championship. We went up for the Final Four, and Hap Terre Haute was up there in Salt Lake City, and there were parties all week long, and my sister was there, and 2 or 3 other relatives were there. And I was invited to one of the private parties because Bob Thompson was putting them on. And so we went in, and Bob was collecting money for Larry Bird's mother, who needed some teeth. She had to have false teeth. And so Bob asked me, for a donation. And Bob had been with me for all through the soybean oil and all my years at Drexel and stuff. And he was still my account there in 1979. And so we gave a nice donation, and she got her teeth and a brand new car. But it was a lot of memories along that way. Folks, remember that 3503 level in the S&P. If we get there and don't go up, boy, that's a great place to short, because you got a very, very low risk. My assumption is the most you'd have to risk would be 8 points, which is $400. And when you're looking at $400 into a $160,000 contract, that is not that much. So pay attention to that number at 3503. And with 03, that could be 02, 01, but there's the old high was 3,500. That's where the daily boys are going to be putting their stops. So watch them if they go up there and take that out, and we'll see what happens tomorrow. We'll see you tomorrow with Bill Meridian, Cycles Research. May God bless.